All right, good morning, all. I've just turn the music off so we can kick things off. Hello, everyone. My name is David Huxley from iCare's mobile engagement team, and I'm coming to you from the far north coast of New South Wales, where I live. I'm based on Bundjalung country, and I'd like to pay my respects to the elders, people, and ancestors of this country where I live. I'd also like to pay my respects to the traditional custodians on the various lands on which we all work and meet today, and any Aboriginal or Torres Strait Islander people participating in this webinar this morning. Look, welcome to today's webinar, which is specifically for New South Wales small employers, which by iCare definition is an employer whose premium is equal to or below $30,000, which accounts for around 93% of all the policies in the New South Wales scheme, which is approximately 300,000 or so policies at present. Today, we'll run you through some of the basics on how your premium is calculated, look at different categories of workers, talk through the wage declaration process, discuss a few recent changes, and hopefully bust a few myths that you might have or any questions you might have. Now, with regards to those questions, we're going to host the session and the formal part of the presentation now for around 30 minutes, at which point the presentation will conclude, and you're free to go. Or if you want to stay on the line for an extra 10 or 15 minutes or so, we're going to endeavour to answer as many questions as we possibly can, which you can raise in the chat at the end of the session. But with over 700 registrations for this morning's session, we can't answer everyone's question, but we might be here all day if we did, but we'll endeavour to answer as many as we can. And we've actually covered off on many of the questions raised through the registration process in the actual content that you'll hear in a moment. Now, everyone's camera and mic should be disabled, so there should be no interruptions. And the chat box will be turned off from now until the end of the presentation, at which point, again, we'll open that up again for the Q&A part of the session and also to seek any feedback as well. And we have Madeline. She's in the background to support us in case we have any technical difficulties, and we'll be managing the chat. Look, the last bit of housekeeping I'll add is that the session is being recorded. We've had lots of people request that. It will be recorded, it is being recorded, and will be made available on our webpage in about 2 to 3 weeks' time. And finally, for any brokers that are attending the session, the code to claim your CPD points will be on the end slide at the end of the session, the final slide. Look, now it's time to introduce my special guest. It's none other than Mr. Craig McBride. Now, look, Craig joined iCare in 2017 and is the manager of premium services, dealing with premium calculations and reviewing the premium model for the nominal insurer. Craig's been around quite a while, actually a long time in the scheme, since 1993, working across a number of different roles from policy to claims and managing the fraud and premium compliance unit. In addition to all this, Craig is a pretty keen surfer like myself, and he's often hard to catch when the waves around Avoca are going off. And with the sun out today, it's a pretty nice day out there on the water. Craig has actually dragged himself out of the water just in time for the morning session. Craig, how are you today, mate? Thank you for joining me.
Good, thanks, Hux. Yeah, it wasn't too hard to drag myself away this morning. It's very, very small and very cold.
Yeah, well, the sun's out though, isn't it?
It is out. It's a nice day. Yeah.
It's a nice day here too, and likewise there's no surf at all today, mate. So anyway, I had a quick swim. But anyway, let's get into it. I know we could talk surfing all day, but that's not what we're here to do. Now, just remind everyone once again that this session here is targeting New South Wales small employers, and I want to define once again what a small employer is in the New South Wales scheme. They are employers whose average performance premium is $30,000 or below, and are not part of a group of policies that exceed $30,000 in group average performance premium. And we'll get into how that calculation happens in a moment. Look, also, small employers do represent about 93% to the vast majority of the New South Wales scheme. So, Craig, let's start with one of the most common questions that we receive as to how the workers' compensation industry rates, or WICs as we like to call them, as we refer to them, how are they set, mate?
Well, the scheme's constantly monitored by our actuaries, and we have a peer review, external actuary Finity, and they do a scheme valuation every June and every December, and then a smaller one in the mid months, the September and March. So we're required to submit the CIRA premium filing every year, before the end of March, that assesses how the premium and how the scheme's performing. So we look at, for each week, 5 years of history. So the wages that have been declared, the premium that's been paid, and the claims costs that have been, and the claims that have been incurred, and the full cost of those claims, to assess what sort of rate we need to charge to cover the cost of those premiums. As a basic example, it's if we had 100 plumbers and they were paying $10 million in wages, what do their claims cost? What premium do we need to keep collecting or collect to cover the cost of those claims? And that sets the rate for every plumber in New South Wales. Yeah.
All right. So using that example, so the rate for each employer in the same industry is the same regardless of location and size.
Yep.
So therefore, using the plumber example, if I'm a plumber here in northern New South Wales, I'd be charged the exact same rate as a plumber in, say, Wagga Wagga or even Bondi or anywhere else in New South Wales.
Anywhere else in New South Wales, yeah. The only thing where it changes is, as we said, this is for small employers. If you become a large employer, then there's a second component to the premium calculation formula that will adjust your premium based on your own individual claims experience. Yeah.
Okay, and we're talking about small employers here. So am I correct in saying that the performance of a single employer in each category or each industry can indirectly impact the overall rate that is charged to all the employers?
Yeah. Yep. So all of those plumbers and all of the claims they have, whether they're a small or a large employer, all goes into the assessment of what will be the base rate that we charge every plumber. Yeah. So if they're all performing better, there's an opportunity for their base rate to be reduced. And if they're not performing well, the base rate will increase, or depending if their average, they'll stay the same.
Yeah. Okay. All right. That makes sense. So how exactly do we apply a rate to a business? We have lots of questions about this. Many businesses have staff performing all sorts of different activity and roles, and they differ in terms of risk. For example, a small, let's use a mechanic workshop by way of example, they'd have mechanics on the tools, repairing cars and things like that. They'd also have probably some administration staff taking in the bookings, payments, that type of thing. And they don't lift much more than a pen, a bit like yourself, Craig.
Yes.
How can we apply a different rate for those administration staff when compared to the mechanics?
No, so since the change in the new legislation in 1987, it's an industry-based scheme. So the WIC that gets applied to your business is that best describes your entire business. So if you're a mechanic, there's probably a couple of rates for mechanics. There's mechanics linked to a new car dealership, or there's a mechanic that's linked to a service station, or there's just a straight mechanic. So everybody that's in there, and every mechanic that's in New South Wales, will have the same rate charged on their wages for all of their staff, whether they're actually on the tools, or whether they're in the office doing the books or doing their admin type work. It's the best description of that activity that describes your business, and everybody gets the same rate. Prior to 1987, there was an opportunity for people to declare an admin rate for admin staff. However, there tended to be a lot of misrepresentation of wages, so there was a lot of admin staff, and the industrial rates went up much higher than what they were. So they changed that in 87. So the incidental activities, it's like clerical and technical people, management services, admin, sales and marketing, head office, all those auxiliary staff or incidental staff to the overall running of the business get the same rate as everybody that's in the business.
And I've just changed that slide there. We'll just use this example here. If this looks like an industrial manufacturing environment, let's just say they manufacture plastic containers by way of example. So we would rate this business plastic container manufacturing, even though we can see we have staff, doing administration, cleaning, warehousing, and also on the factory floor. Overall, it would attract the one rate for all the staff and all the wages, which is the plastic container manufacturing.
The only way you can have a separate other classification is if an employer, and if you're a big employer, you might have two completely separate, distinct business activities. So you could be manufacturing plastic bottles, and you could have, let's just say, another business altogether, which is a dress shop selling dresses.
Hairdressing salon, whatever.
Hairdressing salon, something like that. So there's no link. So the manufacturing of plastic bottles can stop, and the hairdressing salon would continue to operate. So they're completely separate and distinct business activities. And some employers do have that because they might have varying interests, and then they can get a different classification as long as they're not reliant upon each other. So if the warehouse attached to the plastic bottle manufacturing, there is no warehouse if they're not manufacturing plastic bottles.
Yeah. All right. Well, let's move on and talk about claims, because we do get lots of questions about this from small employers, and we'll talk about how they impact an employer's premium. So look, today's audience, Craig, as we said, is predominantly small employers. So that's $30,000 or less. And I know there's lots of myths out there when it comes to premium increases if an employer experiences a workplace injury. So if an employer does experience an injury, a workplace injury, and they submit a workers' compensation claim, what is the impact on the premium?
If their APP, which you said the average, which is their wages times their industry rate, is less than 30,000, there's no direct impact on their own premium whatsoever.
Right.
The premium calculated under the small employers methodology stays exactly the same. The only time that we've since 2018 where we've had a catastrophic claim contribution introduced, which is for fatality claims, that if a small employer may have a fatality, which we don't have a lot of fatalities, fortunately, there is a one-off contribution that's paid by small employers in that instance, which is 15% of their APP.
Right. Okay. Well, just so we can just go through the quick premium calculation, I just threw a little slide up here to help explain that as well. In this example here, it's a restaurant. The wage bill is about $1 million. That's what we're using. And the current rate for the WIC rate for cafes and restaurants as it stands is 1.85%. So the average performance premium for this guy here, Rick's restaurant, is about $18,500, excluding a few other fees and charges. So for Rick, he would be a small employer, and for any claim, any workplace injury, excluding a fatality claim, there'd be no impact on Rick's premium there. So look, it's a really important point, Craig, because so many employers just don't understand this, and a lot of employers believe that small employers believe that claims will impact on the premium. And over the years, just spoken to so many employers that don't report claims through a fear of a premium hike or maybe a fine. And look, we all know if claims don't get reported, this can result in a number of different things. Well, first of all, it's against the legislation. What it means is the worker may not get the medical attention they need as soon as they possibly could, and therefore the injury can get worse over time. The worker may be out of pocket. They may have to pay for some of their medical expenses themselves when they shouldn't have to. They may have to use their sick leave or perhaps annual leave once again when they shouldn't have to, and it can result in a breakdown in a relationship between the worker and the employer, the injured worker, as the worker probably doesn't feel the support as they should. So to reinforce the point, Craig, if a small employer, if you are a small employer, there's no direct premium impact from reporting a workers' comp claim. And importantly, by reporting a claim, it allows for treatment to commence sooner rather than later, so a worker can recover quicker and return to work quicker. But I just want to know, Craig, there is an excess though that may be applicable and charged under certain circumstances. Are you able to explain when this would be the case?
If you upon being notified of a claim, notify your claim service provider or your scheme agent of the claim within 5 days of being notified, you don't have to pay the excess. The excess is waived. So it's also in your best interest to report any as soon as you're notified that there's been an incident, a claim's been made, or there will be a claim made, you notify your claims agent straight away within that 5 days, and then you don't have to pay your excess, which is generally the first week of weekly benefits or $500, whatever the minimum amount is.
And the first week of weekly benefits is about the worker's wage for 1 week. Is that approximately?
Yeah, roughly. Yeah, depending on what their average weekly earnings are. Yeah.
So, all right. So yet another reason to report a claim. Well, let's move forward here, and we're going to move on to another topic, Craig. That's sometimes misunderstood, and it's the topic of contractors and also working directors. Let's see who's covered. So let's start with working directors because that's a little bit quicker. And we're talking about the directors of proprietary limited companies. Mate, can you explain the difference between a working and a non-working director, please?
Well, a working director would be someone who's obviously you've set up a proprietary limited company and you're a director and you're actually performing normal employee duties as part of your running that business. So if you're an electrician and you've set up a company and you're an electrician, you're out on the tools doing all the normal electrical work. You might have staff and you're managing staff, you're doing all of that sort of stuff. You're there 5 days a week, working, 35, 45 hours a week in a normal employee type role, as well as being a director. So you'll draw a wage, but you may then be paid a director's fee for doing your normal what would be a non-working director. So a non-working director, not involved in the business, not involved in the day-to-day running and business operations, but they attend. You might have a board meeting, or they give that sort of official company direction type meetings. They might be meeting once every 3 months, and that's the only time they enter the office, do anything. So they're a non-working director. They're not doing normal employee type roles or duties. They're just there in an official capacity as a director of the company, just maybe setting company policy or setting, the direction where the company's going to go, where we're going to invest, or what we're going to do. Managing their funds and income.
Yeah. So I just want to just let the audience know today that after the session, probably later on today or tomorrow, they will receive an email. And in that email will be a link to a number of resources and documents. And one of those is the wages definition manual. And that wages definition manual actually explains some of these concepts in greater detail, and is a really handy document to have when it comes to doing your wage declaration and determining if someone is maybe a worker or maybe not. And we always encourage you, if you're uncertain, just to give us a call on 134422, but we'll cover that off again in a moment. Now, let's look at something a little more complex, and that is determine if someone is a worker or perhaps a true contractor, as this isn't always straightforward. And sometimes a contractor may be a deemed worker for the purposes of the New South Wales legislation. And what this means is that some contractors may be covered under a policy, even if they have an ABN number. It will also mean that an employer will need to declare the payments to these workers on their policy. Now, Craig, as I said, it's not always black and white. Can you explain when a subcontractor may be a deemed worker and the difference between a true contractor and a deemed worker? And if there are any straightforward rules or tests that may apply?
Yeah, the easiest one straight away is if you engage a contractor that is a proprietary limited company, that they're excluded. They can't be a deemed worker, because the proprietary limited company is a separate legal entity in its own right, and you're paying that proprietary limited company, that they won't be a deemed worker. And that proprietary limited company then has to have its own insurance policy, workers' comp insurance policy, to cover their employees and the working directors if they have a working director. When you might have a sole trader, and if they have an ABN, there's a number of things that you have to look at. So a worker is more likely to be engaged on a more regular basis. It might be for 52 weeks or 48 weeks of the year. They come in and you are directing them where they have to work, when they have to work, what they have to do. You're supplying all the materials. You're directing them in regards to what they actually have to do. They're paid on a time basis. You might provide the tools as well as the materials, and they only work for you and they don't work for anybody else. And that's more than likely going to be someone who the legislation says is a deemed worker. Having an ABN number is just one component. It's not the defining issue to say, which when ABNs were first introduced, a lot of employers said, oh, this person has an ABN, I don't have to cover them. Well, that's not the case. You have to have a number of factors to exclude you in addition to an ABN number to say that you're a legitimate contractor. So a legitimate contractor would come in and probably quote on a job. You might have more than one of them come in and quote on a job to do something, and then you'll accept the quote, and they have their own employees, and they will tell you, I can't do this job for another month. I've got work up until here, and I'll start again in 6 weeks. That's the soonest I can do it. So they're working under their own direction. They advertise their services. They work for a number of different entities like you. They quote, they tender, they do all those sorts of things. They're not just coming in every day working solely for you and just have an ABN number.
So they have control of the situation and the work that they're doing.
More control over their own.
Yeah. And those control tests, we've just put them up on the slide there too, Craig, while you were talking. But I thought, why don't we just give a quick example? I've got an example here, a real example of when I spoke to an employer a little while ago, just to help explain, the difference between a worker and a contractor. And I was talking to a sheep property owner not long ago out Tamworth Way, and they raise sheep for wool production. And each year, the sheep farmer engages a shearing contractor, who we'll just call Sam for the purposes of the example. And Sam has 5 shearing subcontractors. So the shearers that work for Sam, they go from job to job with Sam, and Sam secures the work, and they follow Sam all around regional New South Wales. Now, the sheep farmer who owns the property was advised by Sam that no workers' comp policy was needed by Sam, as all of his shearers had their own ABN numbers. They're all sole traders. They all work on commission, and they all sort out their own insurances and taxes themselves. But if one of those 5 subcontracting shearers was injured while shearing on the sheep property, who is likely to be liable for the claim?
If Sam doesn't have a policy, it could fall against the principal, what we would call the principal contractor, the person who owns the farm. Yeah, that's basically how it works. Just because they're all working for Sam all the time, he would travel them around. He would be doing all this. Sam needs to have a policy, and there's a principal contractor arrangement where the principal contractor, in this case the farm owner, would need to ensure that people that he's engaged to come in and do the work have appropriate coverage, and or the claim could fall against their policy.
Yeah, that's spot on. Because as a sheep farm, that is a business. You know, he probably has a policy in place as well. But look, it's really important if you're engaging with contractors, get a copy of their certificate of currency, or we have an ABN, a lookup tool.
Yep.
And we'll send a link to that as well in that email I referenced a moment ago. So if you wanted to just double check if your subbies have a policy or appropriate coverage in place, you can type into the lookup tool, put in the business name or their ABN number just to see and make sure they've got a policy. Because it's really important, because it may fall back on you as a principal contractor.
As the principal contractor.
Yeah,
Right.
exactly. Yeah, cool. Let's move on to another topic, another important topic we received a few questions on as well. And it's with regard to the renewal and wage declaration process. Because a few people are experiencing a few difficulties or unsure about the best approach. Can you run us through the policy renewal process and what employers can do to make this as seamless as possible?
Yeah, well, for small employers, we endeavour to send out your pre-renewal documentation at least 4 weeks prior to the renewal of your policy. So a lot of you guys, if you're on 30 June renewals now, would have got your renewal documentation about 2 weeks ago, maybe even earlier. So that has all the details about what we're intending to do, what we're going to renew your policy on based on the estimated wages that we've had before in your wages history. Here's what the premium will be, and it'll start on 30 June. You've got the opportunity to then contact us and say, oh, well, I've had a downturn in business. My wages might have been, I used to estimate 500,000, but it's going to only be 250,000. So we can adjust that estimate, or you can go into our online portal and adjust your own estimated wages. After that, you've got, from the time your policy expires, so if you're a 30 June renewal, you've got till the end of October to submit your actual wages. So every year we renew your wages, your policy based on your estimated wages, or what we think a good estimate is based on your wages history. You can adjust that throughout the year, but at the end of the year, you have to then tell us what your actual wages are. And it's essential that you do that, because that actual declaration will also be used to work out your ongoing estimate of wages. And it also ensures that you're only paying the premium that you should be paying. So if we renewed on an estimate that's not accurate, so it's more than what you should be paying, you'll get a refund. Or if it's less, you'll have to pay the top up to get you to what your actual wages were. So that sort of cycle at the end of the policy period ensures that your premiums you're paying are correct. You're not paying any more than what you should, and you're not paying any less than what you should. And it informs the history of your policy to make sure that you're compliant and everything's done correctly and you're paying the right premiums. Yeah.
And a declaration can be done 2 ways, as you just referenced. Online, which will give you that premium indication straight away, or you can do it the old way, the paper-based way, which will take a little bit longer to get processed. So we always encourage online, because it's a really simple process, and you should receive, that adjustment immediately. Look, sometimes employers may get a message that it hasn't gone through. Look, if that is the case, it's best just to call the number 134422, and that number is on your paperwork as well, just to confirm that premium. Look, I also want to reinforce, like Craig has, make sure you do declare your wages. Just make sure you are paying the correct wages, but also if you don't declare your wages for subsequent periods, you may be charged an additional 30% in an upcoming renewal.
Yeah.
And look, the last point I just want to discuss with regards to employers that have received a credit, because I do get lots of questions about this when I see them face to face, as it seems to be a point of confusion. So if someone has received a credit and there's an upcoming premium due and payable, the credit will be offset, most likely be offset against that. If nothing is due, the employer should receive a refund within a few days by EFT, but only if we have the bank details. And look, that's one of the changes we're implementing towards the end of the year to ensure refunds are issued a lot more faster and more seamless, is to only send refunds by EFT. So no more checks from 31st of December at the end of the year. So just make sure we've got your bank details. So if you are entitled to a refund, we can get that to you as soon as possible. The other point is sometimes an employer will get a credit note and they'll think that they are going to be receiving a refund, but sometimes it's just a notification that a credit has been processed and will be offset against their upcoming renewal or other payments that may be due and payable.
Yeah, and if they're
Now,
paying by instalments, and it's less than the outstanding instalment amounts, it'll adjust those ongoing instalments for you.
Exactly right, offset it. So let's move on to a couple of premium incentives, which I'm sure people are excited to hear about, which some employers may not know about. Let's start with the apprentice incentive. So how does an employer, how does that qualify for that?
You've got to have an apprentice that's employed in a trade that fits one of the national qualification codes.
Yep.
So all you then, if you've got that, and you might have one, you might have two, you could, depending on how big you are, you might have quite a few. So the same basic premium calculation is conducted as we had up there before with the guy that had the restaurant with the 1.85%, that $18,500 based on his $1 million in wages. If you've got apprentices that have that you've paid wages of, let's just say 100,000 to make it just as simple, that at the end of the premium calculation, when we find out what your final premium is, or what when we've done all the calculations, your apprentice's wages, $100,000 times your 1.85% gives you $1,850. That is taken off your overall premium payable. So you get that reduction. So you don't pay the base premium on your apprentice's wages. It gets taken off as a deduction at the end of the premium calculation cycle. Yeah.
Yes, and you just need to declare that or contact us for that to apply.
Yeah, and they have to be under one of the NQCs, the National Qualification Codes. Yeah.
Yeah, that's right. And look, another change that's just been brought in or coming in at 30 June is that if you do pay by monthly installments, you can pay by monthly installments now if you pay more than $1,000. I think it used to be 5,000 previously. But there's also a payment discount, isn't there, Craig, if you pay in full?
Yeah,
how do you get
pay
that?
in full when you get your notification of what your premium is going to be for the next 12 months, and it's depending on what it is. It's let's just say it's $5,000. You'll get, if you pay it in full, there's an amount there that'll say if you pay it in full, it's 5% less than the $5,000. So that's, you pay that in full. You don't have any installments, or your premiums paid up front. You get a 5% discount straight away.
All right, and let's move on. I've just changed the slide because there is another new incentive that's being introduced again at 30 June this year in a few weeks' time. So look, are there any other discounts? Well, here it is here on the screen, but what discount is available for those that may have a good claims history?
So for a number of years, we've had what we were calling the EASY, the Employer Safety Incentive, which every employer got. It was a 7.5% discount in the most recent years. Originally, it was 10%. It was reduced to 7.5% about 3 years ago. And that was to sort of incentivize employers to use this money to improve your workplace safety. You might be buying a safety equipment, you might be doing training, you might be doing whatever. It's now come to, we're at a point now where we're saying, well, this needs to be more performance-based, that you will now only get this reward, or what we're now calling the Safe Employer Reward, is if you've had for small employers, you've had no time loss claims in the 3 years prior to the renewal of your next policy period. So if you've had no claims where someone has had a day off, so receive weekly benefits basically is what we mean by no time loss claim. If you've had no claims where anyone had to receive weekly benefits for 3 years prior to that, you'll get the 7.5% reduction in your premium again. So if you've had your apprentice discount and you pay in full, this is another discount, which is 7.5% of your APP as well.
Fantastic. Yeah. All right. Look, now we're just about to finish up, Craig. I'm just going to quickly talk about claims because we do have a few questions about claims, even though this is a bit of a premium session here. Look, I'll just also note that the majority of claims that we have really do have little or no time off work. And for those that do, about 80% return to work in the first 13 weeks. So the next important point that I want to get across is that all employers must have a register of injuries booklet or a program that records workplace injuries online. And in that email, which I referenced earlier, we're going to send you a online tool which can allow you to record your injuries. Now, there are generally 3 types of claims: notification-only injuries, when the claim is just recorded and closed with no expenses. There could be a medical-only claim. So that's a claim that requires paid medical treatment. Could be a physio, could be a GP consult, scans, but no wages are paid for time off work. And the third one is the return to work claim, which is generally more significant. It's where a worker will require some time off work to recover and may require some support in that return to work management. So when it comes to reporting, the general rule of thumb is if the worker needs medical support or a GP visit or any form of treatment, you report the claim. If there's potential it could get worse, you should probably report the claim as well, so there is a record on that as well. Now, Craig, we're just about to move on to the Q&A component, but I just want to reinforce 5 key points that we've spoke about during this last half hour for small businesses in New South Wales. A small business employer is an employee who pays $30,000 or less in the workers' compensation premium, and submitting a claim does not impact on their premium unless it is a catastrophic fatality type claim, of course. You can avoid paying an excess if you notify iCare of a workplace injury within 5 calendar days of you becoming aware of the injury, and reporting claims generally supports quicker recovery and return to work. And you can get a 5% discount if you pay your premium in full and on time or before the due date. And finally, for all small employers, we've now got the new safe employer reward of 7.5%, which is coming in, at the 30th of June in a couple of weeks' time, if they have 3 years of policy history with no catastrophic claims or claims where there has been a wage loss. So that brings us to the formal end of the session. We're going to get into the Q&A in a moment, Craig. So what we're going to do is we're going to open up the chat. And actually, I want to get your feedback. I want to get the feedback. I'll get Madeline to bring up a quick poll just to get some feedback on what you thought of the presentation so far before we move into the Q&A component. So it should be coming up just about now. And what you can do after we've done the chat, here's the poll. If I could just quickly respond to the poll, and I'll just explain the poll. And this is what you thought of the session. So if you thought the session was useful, you'd probably give it a 4 or a 5. If it was so-so, you might give it a 3. If it was a waste of time, you'd give it a 1 or a 2. So I'll get everyone just to do that quickly. Now, if you don't want to stay around for the Q&A, feel free to let us go. We're going to send you an email. Everyone will get an email with regards to a lot of those resources and links that we mentioned through the session. And we're going to get into the Q&A, just so everyone does that. And actually, Craig, I've got a question here that came through through the registration process, which I'm going to ask you off the cuff without any preparation. That is, are volunteers covered by workers' compensation?
Not for weekly benefits. No. The volunteers aren't covered for any of those sorts of claims. They're volunteers.
Yeah, they're not recognised under the legislation yet. Okay. Look, Jenny's asked a question here. I just missed it. Does the SER calculate on your premium automatically?
It's calculated on your renewal premium, and then it would be adjusted when you submit your actual wages. So on your estimate, yes. Yep, so when we renew your policy, we'll look at your last 3 years of your policy to make sure there was no that you qualify, and then you'll get the SER and it'll get taken off straight away. Yeah.
Okay. I've got a question here about the recording, and yes, there will be a recording. No problems with joining late. There will be a recording made available in about 2 weeks' time on our webpage, which you get access to. Question there from Julie about profit share as a bonus. Is that included in the premium calculation figures?
It depends on how it's structured. So the wages definition manual that you've got a link there for, so they can get a little bit complicated on how it's structured. The wages definition manual link will talk to you about those bonuses. Yeah, in most instances that are, but a lot of people will have it set up to take that instead of a wage. So then we are looking at it for sure, but it just depends on how it's paid and how it's structured. But the wages definition manual gives you sort of specific instances of when we assess it and include it, but in most cases it usually is.
And a lot of questions we got through the registration, I can see them coming up now, are around what payments are assessable, what they need to declare, how they are declared, that type of thing. So again, the wage definition manual is a really, really useful document for everyone. So one here about superannuation. Is superannuation included?
Superannuation is included in the definition of wages. It was included back in 2000, literally 23 years ago. There was a program of work that was undertaken to try and make things easier for employers in regards to declaring their wages. So they aligned the definition of wages for workers' compensation purposes for premiums to that for OSR, where OSR always included super, whereas workers' comp didn't. So they included superannuation in workers' comp, so employers didn't have to do different definitions all the time at every 12 months. But part of that was they offset the inclusion of super, which at the time the compulsory super rate was 9%. All of the WIC rates were reduced by 10% to take into account that there would be an extra 9% in wages being assessed to charge premium. So that was offset. But the actual legislation doesn't include super in weekly benefits. It's not considered earnings. So that's why it's not included in your workers' compensation payments to an injured worker, but it's included for the definition of wages and premium calculation. But rates were suitably reduced by 10% at the time. So it was revenue neutral.
There's another one here about changing the WIC codes. I'll just answer that, Craig, if you like.
Yeah.
Linda's asked, is it possible to change her industry code, her WIC code? And look, the best thing you can do is give the underwriters a call and have a chat about the industry rate, that industry that you're in, and have a look at that against the rate that has been applied, and discuss it with the underwriter. So I can't simply say yes or no, but yes, you can if you have a bit of a chat, and if it seems like there is a more appropriate code that should apply. One here about a builder who's got office staff who don't go on site. They want to know if they need to actually include their wages in the wage declaration, and they do all staff. Yeah, that's right. Will we be having a session on premium calculation whose APP is over 30,000? Yes, we are, in about an hour's time. I don't know if I think the registration has closed for that, but I might get Maddie to pop in the link to the chat if someone is keen to join that. That is a different session that Craig and I are hosting at 11 o'clock today. Recruitment company, it's quite a long question there.
There's one there about overtime. So yeah, it's overtime and allowances. It's the definition manual. It's all wages paid. Yes.
Yeah. So, okay. And the question here is $30,000 increased by CPI. I think that's a policy.
That's set. The 30,000 threshold is actually set by CIRA, our regulator, the State Insurance Regulatory Authority, and it's in their market premium practice guidelines. And it's been $30,000 since 2015. It hasn't been increased. We talk to them at various. We have meetings, constant meetings with CIRA, and we're sort of looking. We sort of think the threshold should be raised because it's fairly volatile once you get above 30,000 to 100,000 in regards to that. But
yes,
it's not CPI, but it is set by CIRA. So we really have no control over that at this point in time.
And Gina has a claim that went to tribunal 7 years ago, and she's concerned that may be included in her SCR calculation.
If the date of injury was 7 years ago, it would have no impact at all. Yeah.
And a question about apprentices. What's the best way to find out their code, qualification code?
I think the wages definition manual has a link to the NQC. But if not, you can come onto our website and there's stuff, or if you Google up the apprentice discount, I think there's a link there on our website to the national qualification codes, or you can Google that. It's a national, obviously, hence the name. Yeah.
Yes. And we have a sole trader question. I understand as a sole trader, no workers' comp is required. Is this still the case?
No. Technically, as a sole trader, your policy doesn't cover you because you can't be both the employer and the employee at the same time, which is the variation between when you set up a proprietary limited company, it's a separate legal entity, and you can be an employee of that legal entity, but you can't be an employee of yourself if it's sole trader. But if a sole trader and you have an apprentice or you have employees, you need to have a policy to cover those people that are working for you.
Okay, great. And another question here, we received this also in the registration. Someone is asking about all the staff. How many staff do they include in their wage declaration? They have staff coming and going during different periods of the year, casuals, whatever that might be, seasonal workers. What do you put in the declaration as far as employees?
It's like at the beginning of the policy period, it is an estimate, and we recognise the fact that some people have people that might job share, so they might be doing 2 days and 3 days each. You would count that as one FTE, as in one full-time employee. So it's not something that we strictly we have no regulatory power to enforce any penalties anyway. So it just gives us an estimate of what we think the right number of employees are to wages that are being declared.
Okay. And Brad's asking, is this Safe Employer Reward, SER, affected by notification only claims or only a claim that has wage loss?
Only claims, only time loss claims. Yeah.
Okay. Salary sacrifice amounts, did you answer that already? Included in the wages amount?
It depends on what the salary sacrificing. Employee salary sacrifices for super isn't included, I think. If you look in the wages definition manual, it's the employer contributions that are accessible.
Yes, okay. Question here from Rebecca. Her policy runs from the 31st of January every year. Is it necessary to complete the declaration for the period ending in June? If so, does she have to do it again in December?
No, you only have to do it once, and that's when you, so for the 12-month period that you're insured for, so if you go from January to January, it's whatever wages you paid from that date in January to the end date in January.
Right, and a few people asked about the other experience rated employer session. They can't get enough as Craig. I think they want to see us again in an hour's or 50 minutes time. Madeline has just put the link. She just put a note in the chat there. If you want to email us, we'll send you the link straight away. So you can join us in about 45 minutes time. Look, we're just about done. There's lots of questions here, Craig. I'll just say we're not going to get through all of these questions simply due to time. And normally we like to keep these sessions between half an hour maximum. We have gone a little bit over, up to 45, to answer as many as we can. If you have questions, we always encourage you to give us a call, 134422, and chat to your underwriter who can assist you in anything that you may need answered. Craig, can you see anything else there that you'd like to answer before we?
Yep. Fiona just had one there about the minimum wage threshold. So if you don't think you're going to pay more than $7,500 in the 30 June to 30 June period, you're an exempt employer and you don't need to have a policy. But if you are, or you expect to pay more than $7,500, you need to have a policy.
Great. Okay. Lots of questions about the large employer. A lot of these questions we've answered during this session with regards to administration workers. Just want to reinforce that how we treat administration workers. They have got quite a few questions in there with office staff. There's minimal risk and why different rates are applied.
Sorry,
there was quite a few questions around desk workers or working from home, and why we apply a different rate. We don't apply the admin rate to those workers.
It's governed by the market premium practice guidelines, and originally what was called the insurance premiums order. That's the system that we're in. It's an industry-based system. There's no room to have a separate rate for your own staff that are doing admin or office staff work. Everybody's assessed based on the business description that best describes your whole business, and that sort of admin support and sales support or warehouse support is incidental to the overall activity or business activity. When it did happen, as I said, prior to 1987, there was people were allowed to do that. The construction rate, for example, was for people doing construction was about 20% of wages, and because a lot of employers at the time were throwing as many wages as they could into their admin rate. So there was hardly anybody doing the construction rate, but we're still getting construction claims. So it was then changed to a single industry-based rate where you couldn't split out your operational staff from your admin support staff. And it's just everybody's in the one business activity week. Those activities, they wouldn't be happening if you weren't manufacturing the plastic bottles. So if you're not manufacturing the plastic bottles, you don't have someone sitting in the office working out accounts and doing payments and doing sales. It's all based on that industry and that risk. But every business is assessed the same way. So it's just exactly the same for everybody.
Yep. And this question's come up a couple of times from a recruitment agency. So it may be quite difficult to answer it right now. They've got questions around their policy structure. There's a parent company as well as on hire staff. But they're looking at maybe separate policies. So all I can suggest, because we can't answer that now without knowing the full detail of your business and policy structure. So it's really, you're going to need to contact the team just to have a bit of a chat about the best way and the right way to structure those policies. Here's another one about volunteers. Volunteers, we've already answered that. So volunteers are not covered. They're not recognised in the legislation unless they're paid or get something of value greater than, it's called consideration, greater than $10. And if it is greater than $10, then they are receiving a form of payment and they actually will be a deemed worker. and they would be covered. So I hope there is specialised volunteer insurance out there that you may need to contact, an insurance broker or insurance company or agent to set that up as well. Look, last question here, Craig. Is it possible to change the policy period so it's in line with the financial year?
Yep. Yeah, and the person that was talking there before about January to January,
Yes.
A lot of employers will declare their 30 June to 30 June wages no matter when their policy renews. But if you want to, you can just notify us before the renewal date that you want to short-term your policy to go from, say, 31 January to 30 June. So you'll have a policy that will run for 5 months and then it'll go for 12 months thereon. And again, we recognise the fact that it makes it easier because all of your other stuff is probably 30 June to 30 June. So
Yep. Cool.
it can happen.
Look, that brings us to the end. This is being recorded. I know I've got a few more questions about that. Will be made available. Look, if anyone could just put in your comments or further questions, it's always good to get the questions because we can look at that for future sessions. Any future topics that you'd like us to see us cover, but also just your feedback on the session. Throw that in the chat now while we wrap things up right on time at 10:15. I forgot to mention any insurance brokers that are in the audience that are looking for their CPD points. The code is on the screen right now. And again, we have the experience rated employer, larger employer session starting at 11 o'clock sharp. So anyone who wants to join that, Madeline has put the link or put an email address in the chat as to what you can do to obtain a link to join us in about half an hour's time. Craig, thanks again for your time. Thank you everyone for joining us. And hopefully you can join us again at 11 or at a webinar in the near future. All right. Thanks everyone.
Thanks, Huck. See you soon.